Hello, today is May 23rd, 2020. Let's go over our calls. Here's what we said. Pattern, we thought had the early high, and that was right. We said there were higher MEJT targets, unless we gap down strongly. Should print by early Tuesday. And we said only gapping down smartly and ideally undercutting Thursday's low would negate the positive implications of the trade. That's what we said. Well, this is the pattern with the early high. If you go back every 32 calendar days, you'll see this pattern repeat itself. You'll see a morning peak, a midday peak, and an afternoon peak. If this peak is higher than this one, it tends to rally into the close, tends to be positive. This one's lower, it tends to drop into the close. It's negative. It's not an absolute requirement, but works more often than not. This is a rally into the close, but rallying in the last 5 minutes doesn't cut the mustard for me, because that's not institutional money pushing us higher. These numbers remained on the table. This looks like a gap if you look at regular trading hours, but you can't because all elements of the Standard & Poor's 500 don't open at the same time. And if you use futures, you'll see there wasn't a gap. So even though it looks like a gap which undercut today's low, there really wasn't a gap. It was just an ersatz gap, because when you take all the elements of the index at once, there wasn't a gap. So these numbers remain on the table, and they're still on the table for early Tuesday, but if we gap down smartly, they're off the table. We had a number of signals during the day. MEJT said this rally was false and would retrace, said these drops were false and would retrace. It gave a buy signal in the afternoon, but that just means there's a higher target, and it printed immediately. It told you if there was a drop, it wouldn't stick, but it didn't really give you enough on its own to play for this rally here. But this here was helpful because at the time, there were much higher targets. Were much higher targets, and you knew this drop wasn't going to stick. So if you wanted to catch the falling knife, this was a reasonable time to do it. I don't know why this won't let me go back. There we go. This really is not a very healthy pattern here. We have the early low Tuesday, but in addition to the fact that we broke higher too late, we had a rally all day long, couldn't clear any prior highs. Whole thing's overlapping. We still left this target here, which hasn't filled. All of this leads a lot to be desired, so I'm not certain we're going to see these numbers. I think there's a good chance we gap down. Well, here's the count I'm using. We're just going to change the colors of these, but not change the ideas. And so we'll have it like this. We're going to have, this is ABC for A, and this is AB, and we're making wave C. And what you'd like to do is have wave magenta C have some kind of Fibonacci relationship with magenta A. So you could start from here or here, and it should be one of these targets. Could be that one. Be one of those. Could be one of these. Doesn't have to be. This is just one number. Shouldn't have that. That just gives you a number of other fib targets too. But we just pencil in that if this is the right count, there's a likelihood that we're in wave magenta C, and one of these numbers will tell us where that ends. Well, how about Tuesday? Tuesday's pattern has the early low. Doesn't mean you won't gap up. There are higher MEJT targets which are scheduled by early Tuesday, but if we gap down smartly, probably won't print by then. As always, if you gap down smartly, it kills the call before the open. Friday's day-long rally didn't clear prior highs, didn't accomplish much, was overlapping, so it should retrace at some time. It broke higher too late, meaning institutions weren't behind it, and left behind a hole-in-the-wall gap, which should fill it some time. All these things make gapping down likely when the market reopens Tuesday. Now, just to be clear, I don't trade outside of regular trading hours, so if that doesn't happen, it's not going to cost me any money personally. Institutions won't be trading Monday. Retail customers will be. It's possible, but not required, that we rally Memorial Day, satisfy the targets, but then gap down on Tuesday. That would make everything fit, but just because it makes everything fit doesn't mean it's the only way to play this out. For right now, if we don't gap down, these are the targets by early Tuesday. But it wouldn't surprise me if we satisfied these Monday, but then gap down Tuesday. But I'm personally not risking any money on it at this time, and that's today's call.